This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, March 11th, 2015. Euro dollar. So the euro has now come down to trade to the 106.65 area, with the market making a low just around there today, which is a critical point. If we look at the break that we saw several days back below 1098, that opened the door for a measured move downside extension, exposing 106.65. So now that we've traded down to this level, and given that daily technical studies are well oversold, along with weekly and monthly technical studies, there is risk now for a short-term bounce at a minimum over the coming sessions. Break at this point back above 109.07, the high that we saw on the 9th of March, would be required to officially take the pressure off the downside. But again, with technical studies running severely overextended and with the market having reached this measured move downside objective, there is risk over the coming sessions for a short-term reversal. Sterling dollar. So cable remains under pressure after trading up to the 155.50 area and stalling out in favor of what potentially could be the next lower top ahead of a bearish continuation below the 2015 low at 49.51. A break below 49.51 would expose a measured move down towards the 43.50 area. But at this point, the market over the past several sessions has been content on consolidating above and ahead of 49.51 and even ahead of 150. And if we see a break back above the 151.37, 151.38 area, the high that we saw on the 9th of March, this could delay the bearish outlook and open the door for a short-term correction higher over the coming sessions. At this point, only back above the high that we saw at 155.52 from the 26th of February would negate the bearish outlook. Dollar yen. So dollar yen recently broke above the 7-year high from December at 121.85, with the market trading up on Tuesday just over 122 ahead of this latest minor pullback. On a medium-term basis, the break above 121.85 now exposes the next upside extension towards a measured move at 128.15 over the coming weeks. On a short-term basis, the bearish close on Tuesday could suggest that the market is poised for a pullback over the coming sessions to allow for studies to unwind before putting in a higher low ahead of a bullish resumption. Ultimately, any setbacks in this market should be very well supported into the 118 area, while only back below 115.55 would negate the bullish and constructive outlook. Euro Swiss. So Euro Swiss has been mostly consolidating over the past several sessions following the recovery up to 108.15 in recent trade. There is risk for deeper setbacks, and we could see a bit of an acceleration to the downside on a break below 106, but ultimately the recovery structure remains intact while the market holds above the 104.15 9th of February low. Only back below there would delay the recovery outlook. Aussie dollar. So another key downside break for Aussie on Tuesday, with the market taking out some previous multi-year support from the 3rd of February at 76.25 to confirm a lower top at 79.13 and open the next measured move downside extension towards 73.35. At this point, any rally should be very well capped ahead of 78, while only back above 79.13 would compromise the bearish outlook. Dollar CAD. So dollar CAD has been content on consolidating over the past several sessions, or the past several weeks, although the consolidation is classified as a bullish consolidation, with the market locked within a well-defined uptrend and recently trading this year up to 128 in late January. Those are fresh 5-year highs. So an eventual break above 128 is favored towards the next measured move objective at 130.65, which coincides with a 2009 peak. At this point, any setback should continue to be very well supported above 23.50, while only break back below would compromise the bullish outlook. Kiwi dollar. So Kiwi looks to have put in the next medium-term lower top at 76.14, though a break below 71.76 will be required to confirm and accelerate declines. A break below 71.76 would expose the next measured move downside extension towards the 67.35 area, and again, at this point, only back above 76.14 would compromise or delay the bearish outlook. SPX 500. So the S&P 500 continues with its decline, showing signs of this medium-term top after stalling out at 2120. Those were record highs that we saw back on the 25th of February. The market then triggered a double top formation, broke down, and has now cleared latest key support at 2080 to expose the next measured move at 2040 further down. We're only just shy of 2040, and if we do see a break and close below 2040, this could accelerate declines back towards psychological barriers at 2,000. At this point, only back above the recent high that we saw at 2085 from the 9th of March would delay this current bearish outlook. Gold. So gold has been under some intense pressure since January of 2015, with the market dropping all the way down to trade below 1160 thus far in the 1155 area. This does suggest or warn of the possibility of a full 100% retracement back towards the 2014 multi-year base at 1131, though there is some good internal support coming in around the 1160 area. Inability to close below 1160 on Tuesday does keep the possibility open for this market finding a base ahead of 1131 in the around 1160 at the 1155 low from Tuesday in favor of a fresh upside extension and a move back towards and above 1200. At this point, though, we do need to see a break above 1175 and a daily close above 1175 to potentially strengthen this bullish or constructive outlook and open the door for an acceleration of gains. A daily close back below 1160 or break below 1155 would give reason for concern for the bullish outlook and open the door for that retracement towards 1131, which guards against key psychological barriers at 1,000 further down.